OpenAI's ambitious pricing strategy, advanced AI agents touted to generate 25% revenue starting at $2,000 per month for knowledge workers. Date, March 5, 2025. Introduction. OpenAI is exploring a bold pricing strategy for its next-generation AI models, potentially introducing subscription fees that could reach as high as $2,000 per month. This initiative is primarily aimed at knowledge workers and organizations seeking advanced AI capabilities to enhance productivity and efficiency. The current subscription offerings include ChatGPT Plus at $20 per month and a recently launched ChatGPT Pro plan at $200 per user per month. Analysts suggest that this significant shift in pricing may reflect the need for OpenAI to address revenue challenges faced by generative AI vendors, many of whom have invested heavily in developing large language models (LLMs). Key developments in OpenAI's pricing strategy. New subscription models. OpenAI's introduction of the ChatGPT Pro subscription in December 2024 allows users to access advanced LLMs, including the O1 Pro mode designed for complex problem solving. This plan is markedly more expensive than previous offerings, indicating a clear shift toward targeting serious professionals and enterprises rather than casual users. Analysts like Andy Thurai from Constellation Research note that this pricing strategy indicates a move from experimental phases to a focus on monetization, highlighting OpenAI's goal of achieving profitability. Future LLMs. OpenAI is preparing to release next-generation models tentatively named Strawberry and Orion, expected to outperform existing models by tackling more complex problems and conducting deep research. The anticipated $2,000 subscription price aligns with expectations that these advanced models will yield significant productivity benefits for high-earning knowledge workers, thereby justifying the investment. Competitive market positioning. The pricing strategy positions OpenAI competitively against other AI vendors. For instance, Google offers its Gemini Business and Enterprise plans at $20 and $30 per month respectively, making OpenAI's offerings considerably more expensive. However, the higher cost could reflect the greater value provided to enterprises seeking advanced AI capabilities. Common themes and differences across sources. Revenue generation focus. Across various analyses, there is a consensus on OpenAI's emphasis on revenue generation. The shift from experimentation with AI technologies to a focus on profitability aligns with broader trends in the AI industry, where companies are increasingly prioritizing financial sustainability. Target audience. The high pricing is designed to attract serious knowledge workers and enterprises, potentially alienating casual users. OpenAI has moved quickly to discuss advanced models set for release in late 2024. This rapid development reflects the competitive dynamics in the AI space, where innovation is crucial for market leadership. Implications for the AI market. OpenAI's pricing decisions could trigger a ripple effect across the generative AI market, potentially leading to increased prices as competitors may follow suit. The focus on profitability may also drive AI companies to enhance their offerings with improved safety and security features, an area where OpenAI is perceived to lag behind competitors despite its performance advantages. Conclusion. OpenAI's potential introduction of a $2,000 monthly subscription for advanced AI models marks a significant shift in the AI landscape, emphasizing profitability while targeting high-value users. This strategic pivot could redefine user engagement and pricing structures across the industry. As companies strive to balance affordability with the demand for advanced capabilities, OpenAI's ambitious pricing strategy not only reflects its internal goals but also signals a broader trend in the AI market towards monetization and sustainability. Source summaries. 1. Human-driven AI. OpenAI is considering high subscription prices for next-generation AI models, indicating a shift toward profitability in the generative AI market. Read more humanrevinai.com/2024/09/10 OpenAI considers 2,000 monthly subscription for next generation AI models. 2. Tech Target. The ChatGPT Pro plan offers advanced model access for $200 per month, signaling OpenAI's focus on serious users while addressing revenue loss concerns in the AI industry. Read more www.techtarget.com/search-enterprise/news/366616916/ OpenAI targets knowledge workers with pricey ChatGPT Pro. 3. PYMNTS. OpenAI's executives are discussing high subscription prices for upcoming LLMs, aiming to enhance productivity for knowledge workers while navigating the competitive AI landscape. Read more www.payments.com/artificialintelligence2/2024/report OpenAI considers 2,000 monthly subscription prices for new LLMs. OpenAI's potential pricing strategy, including a $2,000 monthly subscription for advanced AI models, reveals several counterintuitive insights about the evolving landscape of generative AI. 1. High prices may attract more users. While conventional wisdom suggests that higher prices would deter users, OpenAI's strategy may actually drive demand among knowledge workers who stand to gain significantly from enhanced productivity tools. Analysts point out that for high-earning professionals the investment could yield returns far exceeding the subscription cost, thus framing the expense as an investment rather than a barrier. 2. Market segmentation. The steep pricing effectively segments the market, focusing on serious users and enterprises while excluding casual users. This is counterintuitive, as it might seem that a broader user base is ideal for growth. However, by targeting high-value segments, OpenAI could enhance its brand prestige and create a more dedicated customer base willing to pay for premium services. 3. Profitability over accessibility. OpenAI's shift from a focus on accessibility to profitability contradicts the typical tech startup narrative, which often emphasizes user growth over immediate revenue. This pivot reflects a deeper industry trend where companies are increasingly pressured to demonstrate financial viability, challenging the notion that tech firms can operate at a loss indefinitely in pursuit of market share. 4. Potential for broader price increases. The introduction of high subscription fees by OpenAI could inadvertently normalize elevated pricing across the tech industry, leading competitors to follow suit. This contradicts the idea that competition drives prices down. Instead, it suggests that the race for profitability among AI firms may elevate costs across the board. 5. The focus on performance over safety. OpenAI's current offerings, while advanced in terms of capabilities, reportedly lack robust safety and security features. This prioritization of performance over safety is counterintuitive given the heightened concerns around AI ethics and risks. Companies that invest in safety measures may find themselves at a competitive advantage as users become more discerning. 6. Rushing to monetization. The rapid transition from experimental models to monetized offerings may seem imprudent, as it suggests a hurried approach to profitability without fully exploring user needs and market dynamics. This could alienate potential users who feel the services are out of reach or not yet fully developed. 7. Long-term versus short-term strategies. OpenAI's strategy indicates a shift to short-term revenue generation, contrasting with the long-term growth strategies typically favored in the tech sector. This could indicate a significant change in investor expectations and market conditions, challenging the previous assumption that tech companies can afford to prioritize long-term innovation over immediate financial returns. 8. Emergence of new competitors. As OpenAI raises its prices, it may inadvertently create space for new entrants or smaller companies to capture the casual user market, contradicting the idea that established players always dominate. This could lead to a more diverse ecosystem of AI services catering to various user segments. 9. Changing value perception. The perception of value in AI services may change with higher pricing, as users may equate cost with quality. This suggests that pricing strategies are not merely about cost recovery but also about shaping user expectations and perceptions of value in the AI space. 10. User engagement dynamics. A high subscription fee may change the nature of user engagement, fostering a community of highly invested users who are more likely to provide feedback and drive product development. This runs counter to the traditional model of broad user engagement where feedback is gathered from a wide but less committed audience. In summary, while OpenAI's pricing strategy seems aimed at generating revenue and targeting high-value users, it also presents several counterintuitive dynamics that could reshape the AI market in unexpected ways. These dynamics underscore the complexity of the current technological landscape, where traditional assumptions about pricing, user engagement, and market segmentation are increasingly being challenged. OpenAI's proposed $2.000 monthly subscription for its advanced AI models represents a pivotal moment in the generative AI landscape, effectively sidelining casual users. The transition from the relatively affordable ChatGPT Plus at $20 per month to a premium offering aimed at serious professionals indicates a strategic shift. This move not only filters out users who are less likely to derive substantial value from advanced capabilities, but also aligns OpenAI's revenue model with the needs of enterprises that prioritize productivity gains. This focus on professionals means that OpenAI is positioning itself to cater to businesses that can justify the expense by enhancing their operational efficiency. As analysts like Andy Thurai suggest, this could redefine how AI tools are perceived and utilized in corporate environments, where the ROI can be measured against the productivity of high-salaried roles. 2. Implications for revenue generation across the industry. The potential for OpenAI's pricing strategy to influence broader market pricing is another critical but often overlooked consequence. As OpenAI seeks to enhance its profitability amidst significant development costs, other AI providers may feel compelled to follow suit, resulting in a general upward trend in subscription prices across the generative AI sector. This could create a tiered market where advanced features become increasingly exclusive to those who can afford them, leading to a divide between organizations that can leverage top-tier AI capabilities and those that cannot. This trend could also spur innovation in how AI companies package and deliver their services, with a greater emphasis on value differentiation among their offerings. The industry may see a proliferation of more specialized tools and services aimed at different segments of the market, further entrenching this divide. 3. Market positioning against competitors. OpenAI's strategy also reflects its need to maintain a competitive edge against rivals like Google, whose services are priced significantly lower. The difference in pricing could suggest that OpenAI believes its advanced models will deliver substantial value that justifies the higher costs. However, this assumption relies heavily on the performance and utility of the forthcoming LLMs such as Strawberry and Orion. The significance here lies in the potential for a performance arms race among AI vendors. If OpenAI's models can deliver exceptional results that translate into measurable productivity improvements, it may validate their pricing strategy. However, if competitors can match or exceed these capabilities at lower price points, OpenAI risks alienating a broader user base, which could ultimately impact its market share and revenue potential. 4. Safety and security considerations. Another crucial element that deserves attention is the noted lack of emphasis on safety, security, and ethical considerations in the new pricing model. Analysts have pointed out that while OpenAI leads in performance, it may be lagging in implementing necessary guardrails to mitigate risks associated with generative AI technology. The significance of this oversight is profound. As AI becomes increasingly integral to business operations, the potential for misuse or unintended consequences grows. Without robust safety mechanisms, OpenAI could face backlash from users and regulatory bodies alike, which may harm its reputation and hinder widespread adoption of its advanced models. 5. Long-term corporate structure and investor relations. OpenAI's considerations regarding its corporate structure also merit deeper exploration. Reports suggest that the organization is contemplating changes to make its structure more appealing to investors while ensuring it remains aligned with its mission of benefiting humanity. This tension between profitability and ethical obligations is significant as it reflects the challenges many tech companies face when balancing stakeholder interests. Investors, including major players like Apple and Microsoft, are likely to demand more stringent accountability and transparency concerning how AI technologies are developed and deployed. The implications extend beyond OpenAI. Other AI companies may also need to navigate similar pressures, potentially shaping industry standards for corporate governance and ethical AI practices. Conclusion. In summary, while OpenAI's ambitious pricing strategy for its advanced AI models may initially draw attention for its high costs, the underlying implications are far-reaching. The focus on professional users, the potential ripple effects on industry pricing, competitive dynamics, safety considerations, and corporate governance are critical elements that will shape the future of the AI landscape. These factors not only highlight the strategic considerations of OpenAI but also set the stage for broader discussions about the ethical, operational, and economic dimensions of AI deployment in a rapidly evolving technological landscape. Understanding these nuances is essential for stakeholders across the board, from developers and businesses to policymakers and end users. 1. Shift in target audience and revenue generation focus. OpenAI's new pricing strategy indicates a strategic pivot towards targeting knowledge workers and enterprises rather than casual users. This is evidenced by the substantial increase in subscription fees, which aims to filter out less serious users and cater to those who are willing to invest significantly for advanced AI capabilities. This shift underscores a broader trend within the AI industry where providers are increasingly focused on profitability after years of significant investments in development. Analysts note that the pricing reflects an urgent need for generative AI vendors to address revenue challenges as they move from experimentation to monetization. 2. Anticipation of next-generation models. The potential release of new advanced models such as Strawberry and Orion is a critical factor in OpenAI's pricing strategy. These models are expected to outperform current offerings by handling complex problem-solving and deep research tasks. The proposed $2,000 per month subscription aligns with expectations of substantial productivity gains for high-earning professionals. This highlights how AI providers are not only competing on features but also on the perceived value and return on investment they can provide to enterprises. 3. Competitive market dynamics. OpenAI's pricing strategy is positioned against competitors such as Google, which offers lower-cost plans. This situation raises questions about market positioning and the potential for price adjustments across the industry. OpenAI's higher costs could lead to increased pricing for other generative AI products as vendors respond to the need for profitability. This emphasis on profitability may also drive companies to enhance their offerings, particularly in areas like safety and security, where OpenAI is perceived to have room for improvement. For implications for accessibility and user engagement, the high pricing of OpenAI's advanced offerings raises concerns about accessibility for broader user bases. While targeting power users and enterprises may drive revenue, it risks alienating casual users who may find the costs prohibitive. This could reshape user engagement dynamics as fewer individuals may have access to advanced AI capabilities. Additionally, the potential alienation of casual users may have long-term effects on the overall growth and democratization of AI technology, as widespread access to AI tools remains a key consideration in the technology's evolution. These points provide a comprehensive basis for a discussion on the implications of OpenAI's pricing strategy for the future of AI technology and its market dynamics. 1. Netflix's subscription model evolution. Netflix began as a DVD rental service in 1997, transitioning to a streaming platform in 2007. As the competition grew, Netflix adopted a tiered subscription model offering multiple plans ranging from basic to premium. The price evolution aimed to increase revenue and improve content offerings, similar to OpenAI's strategy to cater to knowledge workers with premium pricing. The move not only targeted serious viewers willing to pay more for exclusive content but also resulted in increased revenue, enabling Netflix to invest heavily in original programming and improve user experience. 2. Adobe's shift to subscription services. In 2013, Adobe transitioned from a traditional software sales model to a subscription-based model with Adobe Creative Cloud. This change allowed users to access a suite of applications for a monthly fee starting at around $20 per month, with higher tiers for additional features. Adobe's shift was driven by the need for consistent revenue streams to support continuous software updates and innovations. This move mirrors OpenAI's potential shift to higher subscription fees targeting professional users, emphasizing profitability while delivering advanced tools for serious creators and businesses. 3. Salesforce's pricing strategy evolution. Salesforce, a leader in customer relationship management CRM software, has constantly evolved its pricing strategy since its inception in 1999. Originally offering a single pricing tier, Salesforce introduced multiple levels of service and features targeted at enterprises with subscription fees ranging from $25 to over $300 per user per month. This approach allowed Salesforce to cater to both small businesses and large enterprises, generating significant revenue while enhancing the platform's capabilities. OpenAI's proposed pricing for advanced AI agents parallels this strategy, focusing on high-value users in the enterprise sector to drive revenue growth. OpenAI's ambitious pricing strategy, particularly the potential introduction of a $2,000 monthly subscription for advanced AI models aimed at knowledge workers, signals a significant shift in the landscape of generative AI. This approach not only reflects OpenAI's need to enhance profitability but also illustrates broader trends within the AI sector. Here is a future outlook based on current developments. 1. Market impact and pricing trends. OpenAI's move may lead to a wave of similar pricing strategies across the AI industry. As companies seek to recover substantial investments made in AI development, we can anticipate that other vendors, including competitors like Google and Anthropic, may also raise prices for their premium services. This could create a new norm where advanced AI capabilities come at a premium, thereby establishing a tiered market for AI services that clearly differentiates between casual users and enterprise-level clients. 2. Targeting high-value knowledge workers. With the proposed $2,000 subscription aimed at high-earning knowledge workers, OpenAI is clearly positioning itself to serve professionals who can leverage AI for significant productivity gains. As organizations increasingly integrate AI into their workflows, the demand for advanced features that facilitate complex problem-solving and deep research is likely to grow. This trend will further solidify the position of AI as an indispensable tool in various sectors from finance to healthcare, thereby expanding the user base of high-end AI solutions. 3. Evolution of advanced AI models. The upcoming releases of next-generation models like Strawberry and Orion are expected to redefine the capabilities of AI. These models will likely offer enhanced functionalities, enabling users to perform intricate tasks that were previously unattainable. As these models come to market, we can expect a race among AI vendors to innovate and differentiate their offerings. This emphasis on advanced capabilities will not only cater to specialized industries but also drive research and development within AI technology. 4. Increased focus on profitability and sustainability. OpenAI's strategic pivot towards profitability indicates a broader industry trend where AI companies will prioritize sustainable business models over mere technological advancement. This shift may lead to a more cautious approach in investments and partnerships as firms seek to ensure their long-term viability. Consequently, we may witness a consolidation phase in the AI market where companies with robust financial backing and innovative solutions will thrive while smaller players may struggle to compete. 5. Regulatory and ethical considerations. As the AI sector grows, so too will the scrutiny surrounding its ethical implications and regulatory requirements. OpenAI's current offerings have been noted to lack robust safety and security features compared to competitors. This gap may prompt regulatory bodies to impose stricter guidelines on AI development and deployment, emphasizing transparency, accountability, and user safety. As a result, companies may need to invest significantly in compliance and risk mitigation strategies, which could influence their pricing structures. 6. User access and market segmentation. The high price point of OpenAI's upcoming subscription model could create a divide between casual users and serious professionals. While this approach may alienate some users, it could also lead to a more focused and engaged user base that values advanced AI capabilities. Companies may need to explore alternative pricing models or tiered subscriptions to retain a broader audience while still catering to high-value clients. This segmentation will likely influence marketing strategies and user engagement practices. 7. Innovation in AI applications. The demand for advanced AI will likely spur innovation in applications across various industries. From automating complex tasks to enhancing decision-making processes, AI's role in business operations will become increasingly integral. As organizations seek ways to leverage AI for competitive advantage, we can expect a proliferation of new applications and use cases, further embedding AI into the fabric of daily business operations. 8. Global competitive landscape. As OpenAI and other leading AI companies raise their profiles through advanced offerings, the global competitive landscape will evolve. Emerging markets may present new opportunities for AI vendors, particularly as businesses in these regions look to harness AI for growth. Companies that can adapt their offerings to meet the unique needs of these markets will likely find success, while others may struggle to penetrate these new territories. Conclusion. OpenAI's ambitious pricing strategy reflects a broader trend in the AI industry, emphasizing profitability, advanced capabilities, and targeted user engagement. As the market evolves, we can anticipate a shift towards tiered offerings that cater to diverse user needs, increased innovation in AI applications, and a growing focus on ethical and regulatory considerations. The future of AI is poised for significant transformation, driven by both technological advancements and strategic business decisions.